Hello, my name is Delia Fodor and I'm a mortgage broker, also an affiliated expert with the Real Estate Buyers Academy. Today's topics will be about a mortgage broker's pros and cons. I would like to start by pointing out the difference between a mortgage broker and a mortgage specialist. In Quebec, a mortgage broker is a licensed person who has a permit to practice. He works under a brokerage company, agency, or he works on his own. The mortgage broker works with many different lenders, while the mortgage specialist is employed by a bank or works in commission for the bank, has no special permit or license, and can offer only the products from that specific bank. Now, what I want to talk about in this video is the pros and cons on using the service of a mortgage broker. People know too little about the real advantages of having a mortgage broker. First of all, there are no fees involved to pay for using the mortgage broker service if we talk about residential mortgages. For commercial mortgages, there will be fees, but usually comes up to a certain percentage of the loan amount. In another video, I will talk about how mortgage brokers are paid. Second, the mortgage broker, after having a profile of the client, will be able to suggest what lender will be able to offer in terms of needs of the client. So, if the mortgage broker works with 30 banks in Quebec, like I do, most likely I will be able to find the best deal for my client. Like this, the client doesn't have to go to visit 5 banks to see what they will be able to have to offer. More than that, mortgage brokers have access to a special channel of virtual lenders, very solid and well established in Canada. Unfortunately, clients have no access on their own to this type of lenders. These virtual lenders, because of their low cost, no branches, no tellers, and not selling other banking products like investments, mutual funds, credit cards, they are so competitive on what it means rates and conditions, reason why they become so popular among Quebecers and Canadians in general. Another thing what clients should know before going on their own banks is that in case they don't qualify and their bank pull out their credit score, this will reflect in their credit bureau and affect their score. As a mortgage broker, I assess the entire situation of my client, and if the client won't be able to qualify at the moment, I won't suggest to pull out his credit score, not to make more damage than good. Maybe with some tips, the situation can improve in a short time and the client will be able to qualify for a mortgage. If you have a strong financial profile or your situation is weaker, you can benefit always by working with a mortgage broker. The downside of working with a mortgage broker, I would say, is gathering documents like the bank statement for the last 90 days or the investment statements. But usually, if the client goes to his own bank, they have it in their system unless some of the investments are done with other firms or financial institutions. I would encourage people to get referrals from their friends, from their families. Go in the internet and find out as much as you can about your mortgage broker you want to work with. Like any other field, there is good service and bad service. I always tell my clients the way you choose your debt manager, your mortgage broker, shouldn't be less important than the way you choose your wealth manager, your financial advisor. Look for long-term strategies and proven results. Thank you for taking the time watching my video. See you next time. Goodbye.